Hello, I'm Reggie Young. I'm here with Yury. Yury, if you could explain a little bit about where you're from and how you got started.
Thanks, Reggie. Thank you for having me. Originally, I'm from Ukraine. I grew up in America, in New York, New Jersey area. And last 5 years, I've kind of been digital nomading around. So I'm currently in Thailand, and yeah, I kind of just go to a new country every month or two.
Okay, sweet. And what are you currently working on? What service do you provide, or what are you doing online?
Sure. So I do a couple things. One of the main ones is I do mergers and acquisitions for Onfolio. Onfolio is a publicly traded holding company on Nasdaq. And then I also run two STO agencies. One of them was actually one of the acquisitions that we made under the Onfolio brand, and that's SEOButler.com.
Excellent. I remember when I first met you, it was in Playa del Carmen, and I was going through the due diligence process of selling my business, and I was like reaching out to different aggregators and people who wanted to buy my business. And I remember someone telling me like, "Oh, like you should speak to Yuri, like that's what he's doing." And I was like, "What?" And then I remember showing you specifically my listing, and you're like, "Yeah, I can see why an aggregator would or would not want that specific product." And I remember ever since then I've been trying to follow and see what you've been doing and what you've been up to. So I saw you giving a few speaking events, around the world. I think the last one I saw you in was in Bulgaria. Was it Banksco? How was that, and what was that one about?
Yeah, that was good. It was just basically buying in something online businesses. So I catered the presentation kind of to both sides of the crowd. And it's pretty interesting when you're in a room full of entrepreneurs. And I also did this at the Dynamite Circle event in Mexico. I asked, how many people are looking to sell their business, and you see half their hands go up. And then I asked how many people are interested in buying a business, and then you see the other half of the hands go up. I'm like, well, you have like, a room full of people. Half of you want to sell a business, half of you want to buy it. You should just talk to each other. So yeah, it was actually kind of interesting to see how many people were both interested in buying and selling a business. So I speak to both sides of that.
Oh wow, I didn't know you spoke at the event in Mexico City because I went to day one with Ross. I don't know if you've met Ross, but I went to day one, and then I got too busy and I couldn't make the following days. But if I knew you were speaking, I would have definitely stayed on
I
the
so
one.
I didn't speak at the Mexico City one. I spoke
Oh,
at the
okay.
Playa del Carmen one.
Oh, Playa del Carmen. Okay, okay.
Yeah.
Nice, nice. So, what things, coming from an M&A background, what things is like on Folio looking at, or people in that once you become publicly listed, what kind of brands are they looking to acquire? Because when I reach out to different aggregators, a lot of them now want to see at least 500K in seller discretionary earnings, at least a million trailing 12 months. Is there like a specific criteria that you guys are looking for? Or are you guys even acquiring now, or could you speak to that?
Yeah, it's funny because those numbers actually match ours. So we used to buy kind of a bit on the smaller side. So we would look at anything maybe like 300,000. But as we make more acquisitions, we go upstream. So our minimum now is also 500,000 in EBITDA and up. Particularly focus on digital products and services. So like productized services, agencies, courses. So for example, we just acquired like a course, two WordPress plugins and an SEO agency.
Right. Yeah. I remember, now that I function as an exit advisor, I've been trying to get the requirements of each aggregator or big buyer so I know where to best position the lead. And one thing I've noticed is I feel like there's so much value in businesses that are priced around 300K because it seems like a lot of aggregators don't want to look at it. And then people with like a little bit of money, I'm talking like sub 100,000, aren't looking at those deals between 100 and like 400,000 or 500,000. I think there's a lot of value there. Um, and I guess it would make sense. The bigger you get, the opportunity cost of working on a brand probably like leads into you guys' like turnover or profit margin.
Yeah. So what I'm noticing is, especially when you're in like the $300,000 range, is it's usually not big enough to, hire like a team if it doesn't come with it or like a CEO. So some of these businesses, they're great for like solopreneurs. If you want to like buy one and grow one, it's great. It just doesn't work well for a company of our size where, we're looking for larger businesses, ideally that come already with a team in place where we could then just, plug in like an operator or CEO and continue that. Because on the lower end of the market, it's the business doesn't make enough money to support the growth that it needs and the team that it needs for that growth.
Right. I went to an Amazon seller summit a few months ago, and I found, I wouldn't say like an aggregator, but someone who's also publicly listed and had somewhat of a similar criteria. And I had brought them a lead that had done just under 500K SDE. They were valued at 1.1 million. And they were saying that like one of their hardest things at the time is like there are businesses to buy, but not enough people to operate. Do you feel like that's kind
Mhm.
of like a problem in the industry, or is it like pretty easy to find?
Um, I wouldn't say it's easy to find. It's definitely challenging to find a good operator. And I think kind of the key there is you have to find a way to structure the deal where they see some upside of the business they're operating. Um, because you don't always have, like a large budget for the salary, right? So if you don't, then you have to compensate them in other ways, whether that's, stock or equity or something else, depending on the structure of the deal. But yeah, I mean, you know, like finding a good operator, business owner, CEO, whatever you call it. Yeah, it definitely takes time and it doesn't always work out. So you might have to try multiple people.
Right. Yeah. And do you guys have like a strategy for kind of finding those people? Are you trying to like promote them in house? Or are you using like a recruiting agency? Or are you reaching out to people who have sold businesses before? Do you guys kind of like do a mix of those things, or how do you primarily look for those operators?
Yeah, I think we do a mix of those things. We tap into a personal network. I mean, ideally, if there's somebody really good at the company who's interested in being promoted and has the capacity and is able to run the company, that would be the best case scenario, because they already know the business better than us coming in as new buyers. So definitely promoting internally is a good strategy as long as you have somebody there that you can trust and who can grow the business.
Right. Yeah. I think like a day or two ago, I was looking at Onfolio's website, and I was curious because now I've been looking at a ton of these different uh, brokerages, aggregators, and trying to get in contact with basically all of them. I always find it interesting. I try to click on their careers page and see, where they're hiring, the positions they're hiring, and what they're looking to hire. And I thought it was pretty interesting that you guys are basically only looking for CEOs. So I thought that was very focused. But to me, it makes it seem like, okay, you guys are looking for like the stuff, in my opinion, that matters, like the people that can turn the wrench and like really like truly operate. Um, I was curious as to like what is like a normal deal structure look like when you're trying to onboard like a potential CEO. You talk about like stocks. Is that normally like the first time I got offered somewhat of a similar position, they were mentioning like stock price, and I could get some like a certain amount of stock vested over a certain period of time. Could you speak to someone who had never heard about terms like vested and these types of things, who may be interested in either applying or becoming like a CEO, a part of a holding company like Onfolio?
Sure. So, kind of depends on the company, but generally, like if you're offered stocks, right, they want to make sure you stick around with the company for a while. So they might say, your equity vests over 3 years. And what that basically means is you'll get the full equity after you stay with the company for 3 years. So you might get like 136 every single month until you hit the 3 years when you get the full one. So if you leave after a year, you would get only, like one third of that equity. Or some companies you might have to stay there for 2 years before you get anything. And if you leave earlier, you get nothing. Uh, but yeah, the other thing is like, it depends on the company, right? With some companies, they only give you you'll only see the money if the company like reaches an IPO, for example. And so like, I had a friend, this was like years and years ago, and he was like, he was given a bunch of different stock for work that he had done, but he would have only seen that money if the company actually IPO'd, and they weren't able to IPO and eventually went out of business. And so he ended up, doing a lot of work for a year or two and just didn't get anything in return.
Yeah, yeah, I think that's super important. When I was offered, stock options and something vested over a 4 year period, originally they had offered me what I felt like was a pretty low number, and I at the time I would guess compared to all the offers they had made other people, it wasn't a low number. But what I tried to do is justify the number. So I was like, well, I sold the business within a year of leaving the military. That business netted me 800K. That was within a year. I could take this money, and I know within 4 years I could probably make X amount of dollars. So what I did is I positioned that to the person who's offering this, and I said, well, if there's a 70% chance, and I'm pretty sure I can, and I know I will, I'll do it again. This is my opportunity cost. And so I just challenge anyone that's ever, looking to get hired in a job or whatever. Everything is, I feel like, almost negotiable. And I think, outside of like general, even like salary is negotiable. So definitely negotiate those options as best you can, because like you said, like you can get all the way to push for like a couple of years and get nothing. So maybe you can talk about getting a certain amount up front or changing how often you get paid out. And the same thing when you exit a business, I would imagine, right? So the next thing I kind of really want to jump into is, what are some things that you look at specifically? Because I know you said you have a couple of those like SEO agency. What are some things that you looked at when it came to buying a business?
Yeah. One thing I especially look into now is ad backs. I see some of the craziest things that like sellers or brokers try to do ad backs, particularly around like failed marketing campaigns, right? So I've seen like businesses where, they spend a bunch of money on different marketing campaigns, and then like, maybe like two, three, four different campaigns don't work, and they spend like 500 grand on it, and they try to put it as an ad back. And all of a sudden the business goes from like making 100,000 profits to, once you put the ad backs in, it's like at 500,000. I'm like, no, you can't take, the credit and the rewards for the profitable campaigns and then try to write off the bad ones as an ad back. Um, Another one that I think is standard in the industry as an ad back is kind of like the owner's salary, but I don't agree with that either, because as a buyer, we're going to have to replace them. So we're going to have that same expense.
Hmm.
So that's just something to keep in mind.
Hmm.
Um,
Yeah, I would imagine, if you could you take a quick second, explain for the audience who may not know what an ad back is, what an ad back is and how that kind of affects your valuation.
Sure. They're usually kind of these one-off expenses that don't necessarily affect the the value of the business. So let me give a couple examples. If you're using, if you're writing off business expenses as like your travel and your restaurants, these are not expenses that the new owner is going to have. So it's okay to add them as an ad bag, because you're using it to lower your tax liability, and so you're including it on your P&L and the taxes. But these are things that like a new owner wouldn't need to do. Or another example would be like if a business owner invested, and again, this one might be debatable for some, but say a business owner invested $100,000 into a custom platform. He might try to put it as an ad bag because it's not something that the new owner has to do. And so as the business continues, it's still going to make that money, and you won't have to have that $100,000 expense anymore because it was like a one-time fee. So they're just, they're kind of, you add them back on, to the P&L in order to get the adjusted EBITDA.
Yeah, yeah, totally. So it's kind of like, I mean, the way I've tried to internalize it, it's like the the expenses that are fundamental or like part of running a business. If it's not part of running a business, then it's an ad back. So like buying food is an ad back. If you did Airbnb, that's an ad back. But like you said, if a failed marketing campaign is not an ad back, because that's part of running a business. So it sounds like, when you're going to buy a business, the first thing you do is look at the ad backs and pull apart the ad backs, because if you can pull that apart, that $30,000 failed marketing expense that was multiplied over a period of years, that it's now baked into the valuation, you can probably immediately pull that out or negotiate that down. Is that kind of what you're saying?
Yeah. Yeah. Or sometimes you might not even bother with negotiations because then the multiple they're asking is too high. But there was another business we looked at recently where the ad backs they had for employees, and they were actually legitimate. And it was a business that was purchased from somebody else, and it came with like different team members. And then they ended up getting rid of some of the team members because either they weren't working out or they didn't need them because, they already had other people on the team. So some of their salary was then taken off as an ad bag, and that completely makes sense. It wasn't really needed to operate the business.
Right. Yeah, and that's one big thing too, right? If you're buying a business, look at the ad backs. If you're selling a business, don't put all these ridiculous ad backs where it's like you said, you put a failed launch campaign in there. it doesn't really build trust and confidence in someone trying to buy your business. And like you said, like then you just swipe, move on to the next one, right?
It's true. But again, the thing is, I think they're being advised by the brokers. So I think it's the brokers that are telling them to do this because the brokers are the ones that are putting together the P&Ls for them. So I think they're the ones that are doing it. And it might be because then they start negotiating back and forth and it gives them extra wiggle room. But like I'm with you. When I see that, I instantly lose credibility or trust in whoever's selling that business.
Right. Yeah. You have to look at the incentives of each person. The buyer's trying to get the lowest price. The brokers maybe trying to play the middle, but like you said, if anything, they're getting a percent commission on the valuation. So they would be more incentivized to put an ad back that is probably less trustworthy and less transparent um, than a than a buyer would actually want. So with that, could you maybe explain some of the websites you bought and that process and what those websites are?
Sure. So one was SEO Butler, which is like a very old SEO agency. It's kind of been around for a long time. We bought Proofread Anywhere, which is a course that teaches people how to become a proofreader. And then we bought two WordPress plugins that are used basically like for password protection. So you can protect different parts of your WordPress site or also like secure different files that you don't want people downloading from your site. Um, so one of them we found, I mean, we got them three different places. I think one was Empire Flippers, one was ST International, and one was actually from MicroAcquire. It was a broker on MicroAcquire.
Mhm.
So yeah, using all different platforms and brokers to find these deals. But the process basically looks like this. So, I review, I don't know, hundreds and thousands of businesses, everything that's for sale, I go look at. And then, we kind of narrow it down pretty quickly, just based on the type of business it is and the numbers. And then from there, I'll dive in and I'll dig deeper into the business. I'll look at the financials, I'll read the prospectus, and then we'll have some internal meetings to see kind of which ones we like. Um, I present like these one pagers that lists like the SWOT analysis for each business we're thinking of pursuing further, and then we discuss it on our calls. Um, and if it's something we're interested in buying, we'll send out a letter of intent, which it's non-binding. It just tells them we're interested in buying their business, and that basically starts the due diligence process.
Mhm.
And so there we dive into, depending on the business, there are going to be different things we dive into. So, for example, for WordPress plugins, aside from the financials, we'll dive into the code to make sure it's up to standard. So we have like WordPress developers looking at it. Um, and if everything checks out with the due diligence, we sign an APA, which is an asset purchase agreement. And then the funds go into escrow. And once we receive all the access and files, we tell escrow and then they release the funds to the seller.
Right. And I would imagine, if Onfolio is picking up a business with 500K seller's discretionary earnings, that the process takes longer than 30 days, or probably a couple of months. What would you say is like a normal uh, acquisition process in terms of timeline?
Yeah. So it's a little bit tricky with us because as a public company, we have to do financial audits that other companies don't have to do. And those can take 2 to 3 months. But if you're a company and you're not doing a financial audit, depending on the business, I mean, it can be as quick as, 2, 3 weeks. What I found is just because a business is, might be $4 or $5, $6 million doesn't mean it's a complex business, right? I mean, you've seen content sites that are like pretty simple that have sold for millions of dollars. So it's not necessarily complicated from like a due diligence standpoint and operation standpoint. Um, but yeah, it really just depends on the business. The more team members there are, the more moving parts, the more financial accounts, then the longer it takes to verify everything. We work with a finance company and our CFO to do the financial due diligence because that is, like I do a lot of the parts of the due diligence, but finance is not my thing. I don't want to be matching up, financial reports between all the different accounting systems.
Right. Yeah, totally. And that, for other people who may not be selling to a big holding company or aggregator, and you're looking at buying your own, there are a lot of other services that you can buy that will do due diligence for you. But one thing I do recommend is getting due diligence from. I would even call it due diligence. I would find like an expert in that field. So if you're going to buy an SEO website or an SEO whatever, I would literally, outside of paying for a due diligence package at some website, I would go and find an expert and then pay them actual money and be like, hey, how does this really look like? Because I've I've found that a lot of these due diligence um, reports, they're kind of like they're a mile wide and an inch deep. And I feel like if you're gonna buy like a very specific business, find someone who's really good at it, pay them the money, you'll get much more transparency and they'll give you much more detail. Um, and so when you looked at SEO Butler, what was it that attracted you to that business?
So we have some other partnerships where we're managing other SEO agencies. So for us, it was a strategic acquisition. Yeah.
Nice.
But your advice is actually great. And I don't hear it told that often. And it's one of the tough things. If you're buying a business in an industry you're not familiar with, due diligence is going to be hard because you don't know what to look for, right? So yeah, I would definitely agree with what you said. Find like an expert in that field and have them, consult with you or tell you what to look for because, I see businesses for sale all the time. Some of them I know I personally can't evaluate because it's just completely outside my area of expertise. Like we're not buying crypto businesses, for example, but if I saw a crypto business for sale, I'd be completely lost. I wouldn't know where to start. I wouldn't know what to do. It's just not in our area of expertise. But I know if it's something we are interested in pursuing, then, you bring in the people to help you with that.
Yeah, totally. And that's, I mean, that kind of like the one thing that I try to do as like an exit advisor. One, if I'm helping someone sell a business, is I want to provide that other layer of like Amazon expertise. Even though people have come to me and they've built bigger Amazon businesses than I have, we all have. I always say we all have our different strengths and weaknesses. So find people who complement your weakness by through their strength, and that can always provide value. And it's definitely worth. I mean, like it's going to be a pretty big acquisition regardless. So I would say like try and bring in as many people as you can, and it's only going to help. So with SEO Butler, I took a look at the website, and I was curious as to your thoughts on social signals. If you could you explain what social signals are and how that can maybe help SEO?
Sure. So social signals would be, for example, like a Facebook like or like a Pinterest like or a share, Instagram like. So basically, the purpose of social signals is because one of the main services we offer is backlinks, right? And if you're buying backlinks, then the correlation is uh, the pages that you're buying links to is doing well, it's performing well. So it wouldn't be strange for a URL to perform well, but not be shared across social media. And so that's what the social signals are for. It's just signals to all the platforms and to Google as well that this URL is, it's natural for this URL to get links to it because it's also being shared on social networks.
And then
So
could you
it's basically,
go
yeah.
ahead? Go ahead, please.
I was gonna say it's there just to kind of help boost the SEO of the page. Most likely is like an indirect ranking signal, and just making sure that you're not penalized in any way by Google by buying links because now they're seeing the other aspects of like the user signals around that URL.
Okay. Yeah. And I was curious, like when you're buying backlink, can you buy backlinks directly to an Amazon page, or is it backlinks to like blog posts or websites?
So you can, not a lot of people do it, but we've had clients buy backlinks directly to Amazon pages. And the goal there is actually just to have their specific product rank on Google. For some reason, Google is giving a lot of authority to Amazon. I mean, it's one of their main competitors. So I wouldn't have expected them to rank Amazon as high as they do for certain keywords. But yeah, if you're like an Amazon product listing and you see that, you're ranking like number 3 for an e-commerce keyword, which has really good intent, you're going to want to boost that up higher. And
Right.
so you might build links directly to that Amazon listing.
Yeah, totally. I think, and it's something I learned about, I think like in 2016 of driving off Amazon traffic. this is when everybody was doing like 90% discounts. And I was saying to myself, okay, off Amazon traffic. So at the time, it was like people were sending all kinds of crap traffic from all over the world, all different types of mobile devices. It didn't matter where it came from. They would just send all this traffic, and you could actually rank a product just by outbound traffic alone. And then Amazon updated their algorithm, and then they said, okay, like we're going to give bonus points to qualified traffic. So that traffic could look like Pinterest, could look like Facebook, it could look like Spotify links. It could, but if it's coming from an outside country and probably a device that's less than trustworthy, then we're gonna treat that as like null or not really rank your product for that. And if anything, that can kind of hurt your conversion rate. So I definitely think it's worth, and it's part of my launch and scale checklist is, okay, if I have the budget, depending on where it's at, or eventually what I will do is purchase some kind of backlink, some kind of off Amazon traffic with the purpose of ranking in Google. And like you said, Amazon has a high domain authority. So why try and make your Shopify blog post with 3 blog posts trying to rank in Google for your main keyword when you can try and rank your product page for your main keyword a hell of a lot quicker, in my opinion. And you can even do that with like running Google ads. And then Google ads will give you, better conversion or better like optimization, because they have the choice to choose a competitor like you or someone else's Shopify store or Amazon.com. And they're just going to trust that hell of a lot more, which is why when you type in, product-based search queries into Google, you'll see a lot of Amazon search results and you won't see a lot of Shopify results. So I just wanted to give that as a tip to anyone who is looking at running off Amazon SEO without, because I think a lot of people think, oh, I got to create this 2,000 word blog post and now I got to become a blogger in this space. But no, there really is like a few things you can do to put yourself in a better position from an SEO perspective. So, Yury, I was curious too. Like, I just wanted to quickly touch on where you're at right now. So, you had introduced this community to me called the DC Meetup community, and it's been a really great community. And that's how I was able. Which is crazy because I've known you for like maybe a year or two now. And then I posted on the community, it's like, hey, if somebody wants to hop on the podcast, and you reached out, and I was like, oh, of course, I'd love to have you on. But if you could you explain a little bit about that community and why you are in Thailand right now?
Sure. So it was actually like, I think it was like 4 years ago. I was traveling and I was in Georgia, and I met this girl in through like a Facebook group, and she's the one that told me about the Dynamite Circle. And so, I just submitted my application. I used her as a referral, and then, that was basically it. So it was basically just a community of, like-minded entrepreneurs. And what I like about the Dynamite Circle is it mixes the digital nomad community with the entrepreneur community. Because usually you'll find like one or the other, like the band's called Nomad Fest. I feel like it was geared much more for the digital nomad community. So the Dynamite Circle is like a mix of both. I think there's a little over 1,000 members all over the world. And my favorite part about it is, I can go to any new city in almost any country, and there will be, a community there of people, and they do these juntos once a month. So, it's easy to just kind of make friends and build a community wherever you travel to.
Yeah, I like that. I remember we have a mutual friend, Toby, who I'm hoping to get on the podcast here soon. But he kept telling me when I was in Playa that, hey, he's part of the, I'm going to this meetup, but it's for paid members only. I'm like, what? And he kept saying it like, I think it was like every week or every month. And I was like, what? Paid? And I was like, well, I'm part of like a ton of Facebook groups and, some online masterminds, but interesting. And then you had said the same thing too when I talked to you. You're like, anywhere you go, you can plug into a community. So I really like that, at least from like a nomad perspective, because when you do travel as a nomad, I find, the Facebook groups are one way to find community, but it's not that good. It's better for like, where's the closest, best, laundromat or COVID test that I can take. But how do you legitimately plug in? Okay, there are usually a ton of WhatsApp groups and you can find a directory through there, which, everyone loves to do. But being able to plug into a like-minded community immediately is definitely worth it. And I love right now you're in Thailand. So I would imagine that you went there before we hopped on the call, you went there for the summit that they were holding for the DC meetup. And then now you're kind of like probably hanging out in Thailand. So I think it's like a great way of also expensing your business expenses while traveling, because then you can kind of dictate where you want to go, and it just makes it that much more beneficial. So it's like I just wanted to put that in the ear of someone who never thought about that other layer of opportunity or like business write off that you can create. One, you get that networking community. Two, you get that authorized business expense, and it's just like it's totally worth it. So I'm not saying that you should just purchase any community that you find, but there is some benefit to having a community that you can physically plug into, and especially that one that's in multiple locations.
Yeah, and like you said, it definitely opens a lot of doors because actually, so like Onfolio is owned by another GC or Dom Wells, and we connected through the GC forums, right? So yeah, and a lot of people get like I spoke to a girl who went to the DC BKK in Bangkok, and she already had like 3 new clients after that. So it's great for networking, it's great for business, and yeah, just opened up a lot of opportunities.
Excellent. So anyone who's interested, I recommend follow that similar community or network in your industry, and I would imagine it's only going to provide more opportunities for you. So, Yuri, if anyone was interested in connecting with you or connect with Onfolio, where could they go to find more about the company, or just reach out to you?
Sure. So they can just go to onfolio.com. That's Onsolio. My email is Yury@onfolio.com. You could look us up on LinkedIn. If anybody wants to buy shares, we're a NASDAQ under ONFO, ticker symbol. Um, yeah. We're in Twitter, LinkedIn. They could follow myself or our CEO, Don Wells, uh, on Twitter as well. Yeah. We're
Wait,
all over the place.
yeah, that sounds like it. Cool. So I'll link that down below. Again, Yuri, thank you so much for being on the show, and hope to have you back soon.
Thanks for having me. Bye.
Thanks.